The CPI report today has set off a cascading effect in the markets. There's something I want to show you. I think you're really going to want to see this. I am Dr. Stock, Doctor of Education, and I already told a dad joke today, so here's a dad juke. All right, just in case you didn't go back and see my earlier video, here are the CPI results that we got. So core inflation rate lower than expected, and then a core inflation rate year over year also lower than expected. Same thing for the CPI for all items month over month, negative 0.1 versus the 0.1 that we had, and then 3% cracking down close to the 2s. That's really important as a catalyst, especially for what I have to show you in this video. And then one big implication that kind of sets off everything else is the CME FedWatch Tool. When we look at the important changes that have happened, you need to take a look at these and see what it means, not for this month, but rather for the year's end, because, well, we can take a look. It's all important, but the biggest thing is December's numbers. So let me put that up there for you. So over the CME FedWatch Tool. So as of the CPI report this morning, we went from 5.2% chance of a rate cut in July 31st, down to up to 8.8%. So making it not quite the thing that we can expect to see as a rate cut happening. As a matter of fact, I'd be very surprised. And that could also very much lead to a stronger case for what we have in this video. So I'll show that as well. But so for July's numbers, looking pretty darn good. Now, when we go a little bit farther out to September, this is also a very important change for us. We went from about a quarter of a chance, so 1 out of 4, 25-ish% chance of having staying exactly where we're at for September, down to just above 10%. So 10.9% it says here, 80% chance, and then 7% chance together, combining almost to 90% chance that we see 1 to 2 rate cuts, most likely 1 rate cut by September as that comes along for us. And then moving out to December, we'll look at December's numbers. Here's the next huge thing that I want you to see. So I'll make it a little bit bigger on screen here for you, and I'll read off the numbers just in case you still can't see. So we went from having a 3.4% chance yesterday of staying right where we're at rate-wise, and almost a 0.25% chance, so 0 to 1 rate cuts between yesterday's numbers by December. That has dropped down to under 11% chance. That means the other 89% is 2 or more rate cuts. So we actually have 2 to 3 rate cuts being priced in now, with a growing chance for a 4th rate cut taking place by year's end. So that's incredible to see that huge shift. As a matter of fact, we're actually slightly less likely to get 2 rate cuts, but we're significantly more likely, and that's where a lot of that percentage has been pushed down into, to get that 3rd rate cut happening by December. So let's take a look at the charts and see what's being impacted by this. So this is absolutely crazy when you take a look at it. So I'm going to pull up the charts, and I'm going to show you SPY. I'm going to show you QQQ, and then I'll also show you IWM, which is the Russell 2000 stocks. So here's what happened with the SPY today. So we have an early pop with the CPI numbers, and then sold down below this resistance level. If you watch my previous videos or my live streams with StockMo, you saw that I was talking about it, said that it made me nervous, and we might still drop some more following this video. We'll see. Moving over to QQQ, also had that pop as of my morning video, but now selling down below support, down now having that as resistance. And these are both critical levels of resistance when we take a look that we got a peekaboo up over them, and now we're getting an engulfing candle here for QQQ. So tomorrow could be an even lower day. And SPY, when we look at that daily chart, what we see is that we bounced off of resistance here, now selling down lower, down to 559, and possibly heading back down. This big long trend line here is critical support for us, which was critical resistance when you go back out to the monthly chart, but we did peekaboo up above that just slightly, but now we then jumped into a rising wedge pattern, so we'll see what that looks like in the days ahead. But now over to IWM. So this is the Russell 2000 stocks. When we take a look at this, look at that jump for the RSI. Look at that price pop. We are up, if I put my cursor over this thing, 3.56% for the day on a major index, the Russell 2000, the small caps, which have been absolutely waiting. Look at this consolidation pattern. Broke a little bit to the upside yesterday. That's all it took today for that thing to pop, just absolutely blast off. As a matter of fact, if we go out to the heat map for these things, look at all this green. This is the Russell 2000 heat map for all the stocks that are up in the Russell 2000. If we compare that to what we have with the S&P 500, we got mixed numbers here. The large caps that we have are starting to show that strong, fairly strong red numbers for the biggest of those. And then consumer durables, utilities, those are doing pretty well for us. Energy, minerals, so other ones that haven't been performing so well. So this could be that big shift that we're finally seeing in the markets, away from the large caps and for a search for larger value from the small caps. So one day doesn't make it, but it is a possibility that that's the rotation that we're seeing. And if we go out to the NASDAQ 100, you're going to see a lot more of the same, where just look at that, over 50% of the area covered here from a geometric basis. So let me actually take down my picture so you can see it all. There you go. Hardly any green to be found with the QQQ because it's being led by all this big tech, all of these large cap stocks that are absolutely dragging it down right now. So let's take a look at some individual names here to see what's going on. So when we do that, here's Enphase. So this one has broken up above the 200, getting rejected at the 50-day, but bouncing off of the bottom of this channel that you see for Enphase. So solar absolutely loving what we had for the CPI numbers. Nice strong move today, back up over 50 on the RSI, and we'll see what that means as we head back up this way. So we could have a few good days yet coming up for some of these stocks. Tesla, what's Tesla doing? Now that the regular market hours are here, we're actually getting a high wick off at the top of this, most likely being impacted by other big tech, other big names that are out there, probably starting to retrace. We're going to look and see. 245 is about where we find that support. And I had that in my previous video. Then you're going to be looking for that if we get that sell down leading up to earnings, that could be that next catalyst that puts us up to that 300. So I think we're probably going to see a little bit of profit taking here. I think it's being influenced by what we have with SPY and QQQ, even though it still isn't interest rate sensitive. So we'll keep an eye on Tesla. I think we still have upside to go. I am still bullish on Tesla. I do think that the bulls need to rest for a little bit. I thought that going all the way back here to this candle on Friday, and then when I put that out on Monday, you can see that we rose up anyway. The RSI getting up near 90, around 87 is where it's at right now on the daily charts for Tesla. Like I said, probably time to rest. We'll see if we get that rest or not. And, until that time, we'll keep on watching. I maintain my $300 stock price prediction by August the 8th on Tesla. Moving over to NVIDIA. This morning's video, I said about the rising wedge pattern. I also put this out to my stock group and about the 140 price target. And I said, we're going to drop below this trend line. And that's exactly what happened. So I had that image out this morning as we started to peak down below it. Well, what happened was, if I go down to a lower time frame, the 15-minute chart, you can see that we dropped down below it, came back and retested it. And then that further drop happened. And I said that we could still see that 140 price tag coming off of this, most likely if we stayed above 130. And as of right now, we're down below that 130 mark. So for NVIDIA, I think that you see a significant amount of profit taking. And I think maybe some of those small caps are where we're starting to see that some of that money flow into, because those stocks have been beaten down for a long time, especially in the face of the higher for longer narrative. Now, there's a little bit more that goes on to this, and I hope you stuck around this long. For those of you who did, I really have the treat. I've been saving it for the end. The last 3 charts that I have to show you, I think are the most important charts that I have to show you. So let me put those up there and we'll talk about them. DXY, which tracks the strength of the US dollar. What has that been doing? Well, we've been in a consolidation pattern that, let me see, we touched the bottom of this thing at the end of December. And you can see that we haven't been able to really put in new high peaks or new lows since that time. Well, we actually today with the CPI report broke down below that number that's down below the 200-day and the 50-day simple moving averages. It did tag the Bollinger Band for right now, but it is possible that we get a stronger move down if inflation is expected to continue its current trajectory. And July is normally pretty soft as far as what we get for the CPI, the inflation numbers. So strength US dollar down. What does that mean for the 20-year treasuries as we look at it? Well, that is also a 20-year treasury yield is also significantly down, having broken out of its consolidation pattern. It actually retested and then dropped again. We could get a further drop in those rates, which means that there's more buying for those bonds, which if the inflation rate comes down, if the Fed is expected to cut sooner, then we start to see the cash flow into the bonds. And so that leads me to exactly why I wanted to make this video. Besides all the other information, this is the critical thing about this video is right here, TMF. TMF has just broken up above its 200-day. with that drop that we had in CPI, with the increase that with the drop we saw with DXY, the drop that we saw with the 20-year Treasury yields, the bond prices themselves are going to move inversely to those yields. As more demand is there for purchasing them, then the Fed has to incentivize the Treasury bills less with those higher interest rates. So this is one I think is going to move up for us over the next few weeks to next few months. And where could it move up to? Well, the previous peak that we had is around $53 to $54 per share, which isn't so bad. About another 5% move, at least if we get that golden cross moment, well, we could continue to push up even higher on TMF. So we need to watch and see. And if we look for other resistances, it looks like we're getting really significant historic resistance right around $57 to $58 per share. So I think that we could get a 5 to 10% move with TMF over the next few days to the next few weeks. So 5% up, that would be about $2.50 up. So 54.50 right about there. And then the other one I said was about 57.58. So we'll go 57.50. I think that we could continue to see that price appreciation happen for TMF unless we get other news that really is troublesome for what we see for the bond yield, such as a re-strengthening of the US dollar, or if we continue to see a spike in the Treasury yields themselves. I think that can be somewhat troublesome. But I think right now we've actually gotten a green light until middle of August when the next CPI report comes out, possibly even just the end of July when we get the PCE numbers with the personal income and outlays. So guys, thank you very much for watching. I really hope that you appreciate it. If you want to see my buys and sells, see how I'm playing this market, you can do so by using the link down in the description for the Patreon. You click on that, sign up, jump on over to the Discord. That's where I post my buys and sells, where I talk with my community members, put out all my technicals that I share with the group, and along with the purchases that happen as a result of those technicals. So like I said, that link is down in the description. Some pretty awesome moves today. Very strong moves up with a lot of the options plays that I had out there. And then even my short hedges came back a little bit with the drop in the markets. So that worked out very profitably, very much in my favor. And I was well positioned to handle it. If you guys will also want to learn to do technical analysis like I do, learn how to really boost the power of what's in your portfolio, you can do so using that link down in the description for the technical analysis trading course. I'm going to let you go, guys. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.